Hey, I'd like to welcome you to another episode of Mission Matters. My name is Adam Torres, and if you'd like to apply to be a guest on the show, just head on over to missionmatters.com and click on Be Our Guest to apply. All right, so today my guest is Kate Laurence, and she is the CEO over at Blockcelerate, also known as BCVC. And this particular interview is part of our Milken Global Conference coverage series, where we bring to you the best of attendees, speakers, panelists, and other individuals that attended the Milken Global Conference in Beverly Hills, California. So first thing first, Kate, welcome to the show.
Thank you, Adam, and I'm really excited to be on Mission Matters.
All right, Kate. So we got a lot to talk about today. So I'm excited to get into your journey really in venture capital investing and learn more about Blockcelerate, also known as BCVC for the audience. And just get us kicked off here. I mean, how did you get started in venture capital? Where'd that start for you?
So for me, the venture capital journey started while I was still working at my previous firm. I spent 10 years at a global research firm, publicly traded, called Gartner. For those of you who don't know, they're publicly traded under the stock symbol I. For 40 years, they've been working with IT professionals across Fortune 500 companies and helping them make technology investment decisions. And over the years, they've developed a practice called the Invest Group, which then supported venture capitalists and private equity firms in making due diligence decisions on software investments. So that's where I ended up at Gartner. I spent 4 years in Silicon Valley. I supported some of the largest venture funds, from Andreessen to Sequoia, NEA, private equity firms, KKRs of the world, and that gave me an in, if you will, and an insight into that world. And then at the same time, I got personally excited about the blockchain technology. I started investing in mining Ethereum early on, and when I went to pitch these venture capitalists on blockchain, none of them really had any idea about what it is or why it matters, and weren't interested at the time to start their own crypto-focused venture arms.
What year was this roughly? So what year was that roughly, what you're talking about?
That was
when they
roughly
still kind of had no idea yet. Go ahead, please.
2016, 2017,
wow.
Obviously that was the beginning of the hype, so people started paying attention, but really we didn't have these major VC
that was
firms.
Early, yeah.
Right. They did not get involved until, I would say, 2021 or so. So that was my early start. So I had to make a leap and start my own fund, and the rest is history.
So what was that like? Like let's stick in that time period a little bit longer. So you're pitching, you're trying to get this new idea. And the reason I ask, by the way, is because there's many individuals that are either entrepreneurs, executives that watch this show, and if at first you try and it don't succeed, in this case, you went out and launched your own thing. So I think it's super interesting. What was that like, pushing your idea further after maybe didn't initially get that same traction that you were hoping to get?
Yeah, no, I think that's a quick kind of synopsis of 6 years or 7 years of hard work and overnight success, as they say. It started with $1 million. That was a seed check from one high net worth individual and in the family office, to now we manage close to 100 million assets under management. So that's just a short history, if you will. You just go from 1 to 100. That's an easy story, right? But then there's a lot of ups and downs in between. But depending on how much time we have, I can go in a lot more detail, but I'll try to keep it short. It wasn't an obvious choice for me to start my own thing. Obviously, I spent 10 years in a very comfortable, as they call it, golden handcuffs, where every time I thought about leaving, they would raise my salary and give me more benefits. And I know there's a lot of folks like that in the same boat, but you really need to think hard about what you want to do and make sure you want to make that leap of faith, because it's definitely not an easy journey. Also, I had offers from very good places like Amazon and Microsoft and a few other venture funds that I could join instead of starting my own fund. And I had to decline those to pursue this. But in terms of how we got started, we had an idea for something that hasn't really been an established market yet. Crypto VC has not existed as a market in 2018. There was a couple of VC funds, but they weren't really established. So there was a couple of battles that we had overcome. One was we need to convince people that blockchain is here to stay and believe it. Believe me, I'm still doing that. I'm still convincing people it's here to stay.
I do believe you, actually. Go ahead.
And two, we had to convince why venture capital is the right vehicle to deploy into the space, not a hedge fund. Because in 2017, especially during the run-up, we had a lot of hedge funds, and a lot of them made a lot of money in a very short period of time. So, you're asking people to lock in their funds for 10 years instead of making a quick buck in like a year or two. So that definitely was an objection that we had overcome.
Yeah.
Over the years, the venture capital objection sort of fell away in a sense because a lot of hedge funds just went out of business because of the volatility of this space. And blockchain objection also not completely, tackled, but we're getting less and less questions about that just because of the proliferation of the market caps of these large blockchain protocols. But it's still definitely out there as a question for some folks. The bigger question now, 7 years later, is why you? And that is not a question we were asked 7 years ago because there were only 5 or 6 or 10 of us.
So it would have been why you, because there's no one else.
That's right, because there's nobody else for founders.
That would have been the original answer. Go ahead.
Exactly.
That's
now
awesome.
There's billions of dollars that flew into the venture space in crypto. Now you have to differentiate yourself.
So what are some of those differentiating things, and also just, in deploying capital on your side of things? What do you think now is the answer to that why you question?
That is the question I wake up with every single day. And it's the same question that I think, of course I don't know, but I think Sequoia and even, Bessemer and Lightspeed and KKR and, we name it, Kleiner Perkins, they must be waking up with the same question.
I totally agree.
No matter how good you are, you're just one investment away from being second-tier venture fund. You have to constantly take risks and push the envelope and try new things. So one thing that I'm honing in on as a fund, I'm honing in on as a strategy for the venture fund that I think is not prevalent among others, and I think is a clear differentiation for us, is the founder-led deployment strategy. We really believe that founders are actually much better at writing checks into other founders than VCs. Not just founders who are former founders, but founders who are active founders. Because if you're an active founder, you have boots on the ground, you can see what's happening, you can see the trends, you're talking to your peers, and you can see the next trend before everybody else does. And also other founders are attracted to you because you had level of success, they want to learn from you, they see you as a mentor. So these founders have amazing deal flow that, frankly, I don't think VCs have. But founders don't have often liquidity or the time to really manage this process as an institutional VC firm. So what we do is we solve that problem for them. We say, hey, you have amazing deal flow, you have a good sense and ability to pick winners, but you might not have time or resources to deploy capital. Let us help you. And that is really the strategy that we're leaning in as a fund, and that seems to be working well. But again, if we talk maybe 2 years from now, 3 years from now, others might catch on, and I'm going to tell you something different.
Yeah, I could see that. I was sitting here thinking about it, and you're right. Things move fast, and that's interesting to me. Any kind of key lessons or things that you care to share that you learned maybe specifically from deploying capital in this particular field? I mean, you've been in there, 7+ years or so. Anything you'd share there? Key lessons?
Yeah, absolutely. When you start a fund, you don't necessarily think about what you're going to be doing 10 years from now, but you are locking yourself in for a 10-year journey. And the number one thing that you need to think about is who you're going to lock yourself in the journey with. Because ultimately you're going to spend quite a long time, oftentimes longer than a lot of marriages last, with that group of people or a person or two people, depending on what type of fund you want to start. As a part of that question, when you think about that, you need to decide for yourself, do you want to be a lone wolf or do you want to build a team? Do you want to build a service business or do you want to build a product? Do you want to build something that scales or are you okay with the type of business that does not scale? Because ultimately venture capital as a business is like being a real estate agent. It's not it's not a scalable business. You're not building a platform. So then the question becomes why? If you have limited time, why are you building something that's not scalable? Or if you think it's scalable, how you're going to scale that over the next 10 years. And I don't think that a lot of people have a good answer to that question. A lot of people say, well, I'm going to do such a good job, but I'm going to raise so much more money that I can just hire more people. But hiring people who are just as good as you is extremely, extremely difficult in venture. Why? Because if they're so good, they can go raise their own funds.
Exactly. Yeah, I've always found it tough because of that. Like it's almost like, and then that's also why you mentioned, or actually I don't want to put words in your mouth, but one of the reasons why you said in the past when you were maybe going to do something else, you get a raise and some more benefits, and it's like, don't go, right? Because to find another one of you, it ain't easy.
Yeah, and it's you not only need to hire them because they're good, but you also need to get along with them. Because it's not just like you hire an employee, which is already a hard thing to do, but you're almost hiring your significant others in this case because you're in it every single day for 10 years. It's not something like you would ask for a commitment when you hire to join a company.
It's great. Well, Kate, I'll tell you, I learned a lot today, and it's fun to see and hear about kind of the beginning spaces, and you're one of the pioneers in that space during that time period. So great having you on the show today. If somebody wants to learn more or connect with your team, how do they do that?
Yeah, and thanks for having me. It's been fun. They can email me. I'm kate@blackcelery.vc. I'm sure you can spell that out on your website because it's not an easiest name to spell. But, I would be happy to chat offline with folks who are interested in venture and blockchain and crypto or just startups.
Yeah. Amazing. And for everybody listening, just so you know, we'll definitely put some information in the show notes, as Kate mentioned. And speaking of the audience, if this is your first time connecting with Mission Matters or listening to an episode, don't forget, hit that subscribe or follow button. This is a daily show. Each and every day, we're bringing you new content, new ideas, and hopefully new inspiration to help you along the way on your journey as well. So again, hit that subscribe or follow button. And Kate, thanks again for coming on the show.
Thanks so much.